Good morning, ladies and gentlemen, and welcome to day two of the Digital Investment Summit at Malaysia Tech Month 2020. My name is Sean, and I'll be your host for the day. It is my absolute pleasure to welcome all of you here this morning. And I'd like to thank all of you for taking your time off to join us today, as well as for those of you who has joined us from yesterday. Now, the Digital Investment Summit aims to elevate Malaysia as a premier digital tech and services hub and the heart of Digital ASEAN. Now, this is a fully virtual event which will feature a series of live webinars, showcases of tech, talent, ecosystem, and locations. Now, this event is targeting regional and global decision makers, senior business leaders, and C suite officers of digital tech and services companies, startups, investors, corporates, and the international communities looking for opportunities right here in Malaysia and ASEAN. Digital Investment Summit at MTM 2020 will be exhibiting Malaysia as a fertile ground for investment and the epitome of a digital home. Now, before we move on, allow me to convey some housekeeping guidelines. Of course, if any of you have any questions, you may submit them via the Q&A comment box. Meetings and also chat rooms for attendees are available for you for your networking convenience. And for those of you who are watching this live stream on Facebook, you have any questions whatsoever, please write down in the comment section below. Thank you. And right now, ladies and gentlemen, we will be moving forward for our first session for today, and it will begin shortly. Click Join Session. And for this, let us welcome our speakers, Mr. Sudev Banga, Managing Director from IDC ASEAN, and Ms. Darshini Selvaratnam, Senior Market Analyst, Financial Insights from IDC Malaysia, to talk about crystal balling for 2021. Malaysia, truly the heart of Digital ASEAN? Mr. Sudev and Ms. Darshini, over to you now.
Very good. Well, a very good morning, and thank you, Sean, for such an enthusiastic intro. Early in the morning, it's always very exciting to have somebody that perky and that awake. My name is Sudev, so I'm the Managing Director of IDC in ASEAN, and perhaps let my colleague introduce herself as well.
Hi, good morning. I'm Darshini, a Senior Market Analyst for IDC Financial Insights. My main research area is on digital banks in Asia Pacific, but along with that, I do market research into the financial service industry in Malaysia.
Very cool. So for the next one and a half hours, what we plan to take you through, there are probably a few different segments of an audience watching in today. So whichever segment of audience you are at this moment in time watching in, there's going to be a little bit of something for you to take away in this presentation. I guess the first part, obviously, the skew of the presentation is very much into investors and investment into Malaysia. I guess you are going to learn about Malaysia and I guess what's driving Malaysia from a digital standpoint and why it becomes compelling for investors to actually want to come across over here. If you are from an end user or I guess a vertical sector in Malaysia or even a foreign vertical sector, foreign company in the vertical sector, your key takeaways here are very much going to be around digitalization, as well as moving ahead and plowing ahead in your digital transformation, accelerating around digital transformation. And if you're a vendor, a technology vendor, whether local or foreign, I guess there will be key takeaways from you in terms of what's driving economies, what's driving the end users at this point in time. So there's going to be a little bit of everything for everyone in this presentation. So depending on which segment you are, your interpretation of the data, and obviously being IDC, we're going to have quite a bit of data points within this presentation that you can take away on. And if it comes across too small, don't worry about it. I'm very sure you're going to get the slides. Darshini and I will also be taking questions towards the end of the presentation. So if you do have any questions at all, We have a team member just planted nicely within all the broadcasts at this point in time to actually pull out all the questions that are posed by you, and we will get the questions here, and we will be able, or we'll try to answer as many as possible towards the end. So my recommendation here is to kick back, relax, enjoy the session as well, and perhaps grab a coffee. I have my coffee right next to me. I'm sure Darshini has a coffee as well, and we're going to have quite a bit of an enjoyable session today. So going to the essence of it around Malaysia and the idea of whether it's truly the heart of digital ASEAN. When you talk about Southeast Asia, you talk about Asia Pacific into Southeast Asia, and you talk about the past 3 to 5 years, the trend we've been witnessing across Southeast Asia has been the extreme acceleration around digital transformation. The luck for Southeast Asian countries have always been the idea that they get to leapfrog across in learning from their Western counterparts. Like it or not, whether it's the US, whether it's Europe, we've seen a lot of acceleration of digital transformation initiatives over there. However, Southeast Asia, the good news has been that we've been able to learn from that, adopt it within our cultural norms, and be able then to accelerate it in our own given way. However, of course, the elephant in the room to address, of which later I'll take everyone through, is going to be COVID-19, the pandemic. Of course, you would have heard a lot of presentations over the past couple of days around the idea of the pandemic and the impact of the pandemic very much on the economies across the world, as well as Southeast Asia and Malaysia. However, we feel 2021 is going to be a good rebound year. Now, I'm prefacing things a little bit because as we go through the presentation, you are going to see some of the stats and data that might look a little bit scary at this point in time when you see the contraction. However, from our vantage point, we do feel that it is going to accelerate in 2021, and we do expect a recovery in 2021. So when we talk about the digital economy, and this is data just of January this year, just January 2020. At this point in time, we were watching countries move very quickly towards the digital economy. We were watching GDPs digitalize. The discussions we were having across with a ton of organizations globally, regionally, as well as down into Southeast Asia, as well as Malaysia, was the notion of a digital economy. Now, this was a stat just in January of 2020. And when you look at the cut across in the 2023 expected GDP or digitalization of the GDP, our counts in IDC were witnessing at least slightly more than half of the GDP of the world to be digitalized. So we're talking about 51 to 55% of the GDP being digitalized. And for the past 5 years, these have been the conversations that we've been having with a ton of organizations, ton of country governments that we've spoken to as well. Digital has always been the most important part of their agenda over the past 5 years. When you think about it, it's very interesting. Just 10 years ago, if you think about Malaysia and you think about the word digital or digital transformation over the past 5 years, the norm of that word, or occasionally the overuse of that term as well, it's become so prevalent to the point that when you hear digital transformation, it's now almost a given. But think about yourself just 10 years ago. Think about yourself in 2010 or even 2012 in Malaysia. If you're a Malaysian organization sitting out there, think about yourself at a point in time when you started talking about cloud, the notion of having to host data outside in the cloud, the notion of IaaS or SaaS, what is that all about? Even 2012 was a very difficult proposition. In ASEAN, it was a difficult proposition. Globally, of course, it was a bit of a trend that came across to our part of the world in 2010, 2012. But that notion of it was something which was extremely difficult to grasp. And I used an analogy back then around cloud, was that cloud is like a ghost. The simple fact is that you cannot put a ghost in a box. You can't shake it, you can't feel it. And it was very difficult for people to want to grab onto that notion. So the notion of the digital economy was on the horizon over the past 5 years. And when I say this now, in this age at 2020, it is not surprising to you that it was on the horizon. But of course, unfortunately, the world literally came to a stop. I think in January, February, especially in Southeast Asia, everything came to a huge stop. By April, May, it started to reverberate across the entire globe. And we saw, I'm just going to pull everything out here for you so that it's a little bit easier for you to capture. But we saw business up till now when we talk to organizations, when we talk to governments, when we try to measure the sentiment on the ground, the most difficult part we have at this juncture is that business confidence is still fairly low. With the exception of Asia Pacific, of which I'll cover a little bit in a couple of slides forward, but business confidence is still fairly low. Unemployment rates are up. However, it's when you look at the unemployment rates, although it has skyrocketed in certain countries, and it is unfortunate that that percentage continues to grow. However, when you think about the preparation we had in February, March, in terms of thinking around unemployment as well as business confidence, as well as, I guess, to the point of business continuity, if we were to reflect back on 2008 or 1998, if we think back of the other economic crisis we've had, when we compare out unemployment rates, when we compare out a lot of the business confidence issues, the impact isn't as heavy as those periods. And I'll get into that a little bit later. Of course, now although there's been lockdowns across Southeast Asia, Malaysia being one of them, post-lockdown infections are also growing in Malaysia. I believe the count yesterday was a 1844 or 1884, something to that regard, above 1,005. Although there are different clusters and it seems to be under control, but post-lockdown infections does impact sentiment. And then next, when you talk about the rest of the rest of the impact around the lockdown, we are seeing consumer confidence also obviously fall. The changing behavior of consumer confidence in terms of how they consume products, or you and I right now, there's a lot of preference around the need for us to sit back and order something. I can't remember the last time I went to a grocery store, I'll be honest. I think now, at this point in time, anything which I can do online, anything that I can do via e-commerce, that's something that I would gladly hop on and do. And I think Darshini has some very good stats about that later throughout the presentation. And of course, ultimately, the notion of working at home has grabbed a lot of organizations at this point. If we cut across Southeast Asia, or even, excuse me, to Malaysia, we've seen organizations start to put work at home policies firmly into HR policies, and we expect for it to continue very much through to June 2021. The funny part is that a lot of you might be sitting there asking me, Sudhir, what if a vaccine were to be made available to the public by the end of this year or even early next year? Will that change the sentiment on the ground? The answer to that, based on our surveys and based on the sentiment that we have at this moment in time, is that no, it's not going to change much. A lot of organizations have adapted to a brand new way of doing things. They've adapted to a new platform economy. They've adapted to a different way of engaging with their audience. And therefore, we do anticipate that a physical virtual environment is going to continue square on into 2021. And this is going to be the brand new way of doing things. So when you look across the GDP growth against ICT spending, now don't crush your eyes looking at it too much. Perhaps you will get the slides, but I guess what we're trying to come across here is to talk about how right now we've seen IT spending tied very closely towards the growth or the contraction of GDP. If you look at 2020, the estimation at this point in time is a contraction of 4 to 5%. And similarly, if we look across a 4.3 trillion US dollar ICT spending market across the globe, we are expecting a contraction of up to about 2% by the end of this year. However, one point to note, and this is what has us excited, and you'll see a couple of slides on this later. One point to note is around the idea of what we call third platform spending. Third platform spending is essentially spending on new technologies, new digitally transformed technologies to help along organizations, especially in view of something like a pandemic right now. So third platform technology spending for us, we're seeing a little bit of an acceleration around that, although core ICT spending has reduced. However, now the shift of the budgets towards these targeted investments are increasing at this point, and we are very encouraged by that notion, looking at organizations or even governments starting to port themselves onto an e-platform, and ultimately that has spelled out, or I guess, the drive for a lot of countries over the next 5 years. So if you look at this, what we have done in IDC, we as well took the unprecedented step to try to track markets as often as we could when the pandemic struck. In January, we started going to the market every 2 weeks because we understood the need to I guess assess the market, to know what is happening on a very real-time basis, because things were changing extremely fast. And if you look at this chart from Jan all the way up to September, you can see that buyer intent as well as market indicators have always had a slight delta in terms of how they function. Market intent has always traditionally been higher. Even in Malaysia, when we look at market intent or buyer intent, it tends to be slightly higher versus actual spending, for example. So when we looked at this chart and we started to look at the worldwide confidence in purchasing of tech or consumption of tech, we can see that confidence was very badly hit in May, especially when there was acceleration on the infections. However, I think one important point to note around here, even though there was acceleration in infections, acceleration of infections or total number of infections does not correlate with economic development or economic growth or contraction. I think I'm going to put that out there. That's going to be a very good discussion for us later. It does not correlate. However, what happened during that period we saw was more organizations essentially being very concerned about, number one, staying in the black, but number two, reorganizing their investments. We noticed more and more organizations during that period started to take a step back and relook, especially at their core ICT, to understand how do we get out of this pandemic? And if we were to get out of this pandemic, what would be the right investments that we make at this point in time, so that if it's prolonged or if it were to recur, how do we manage this situation going forward? So you can see the overall technology buying and spending confidence took a hit in May. Towards September period, we see a bit of a recovery, but this gives you a little bit of a different picture when we look at the regional count. Now, if you look at the regional count, you can see there was a bit of a kink in the curve for Asia Pacific during the May period when the rest of the world was going down. That was very much owed towards the recovery in China and the recovery across in Korea, Japan, as well as Singapore. There was quite a bit of recovery at this point in time that I guess elevated confidence levels in these respective countries and the region. And Malaysia at that point in time also returned to confidence. Now, the good part about all this is that there was a return of confidence. There was a bit of a dip when there was reinfections coming back. Southeast Asia as a whole, confidence took a bit of a hit, but it did not go down as significantly as we thought, especially during March and April when the infection rates and the respective lockdowns were occurring. That was because a lot of organizations were getting used to things. Now, when lockdowns first happened, I guess the very important thing for us to grab at this point is to say that no one knew what to do. It was the first time for all of us. It was the first time for everyone. It was the first time for governments. It was the first time for enterprises. It was the first time for investors. It was the first time for consumers. It was very much one of those where when you think about it, there was really no playbook. There was no handbook to help you through that period. So the March-April period was extremely difficult because a lot of organizations had to change their mindset as to how they were going to function. As they moved towards the later part, towards the June-July period, when things started to equilibrate, when things started to get normal, that's when we realized that confidence wasn't overly hit in Asia Pacific. Malaysia, actually in Southeast Asia, has one of the highest optimism levels across the entire Southeast Asia. 78% of organizations in Malaysia are actually more optimistic about the future than they are their Southeast Asia counterparts. That is in spite of a recurrence or a second wave or third wave, whichever number you're on at this point in time. I think it's dubbed the third wave at this point. But in spite of that, the optimism of Malaysian organizations is high. And I'll tell you why this is important towards the later part of the presentation. So IT spending sentiment purchasing index, I think this is very critical for you to understand as well. Globally, there was a dip all across core ICT. Core ICT took a major hit. Hardware traditionally over the years have been taking a major hit globally. Organizations have been moving more towards managed services. They've been moving more towards cloud-based applications, cloud-based platforms. So therefore, hardware traditionally have always been taking a hit. However, when you look at devices, you talk about corporate purchase or provision devices, and you look at consumer purchase devices, that was where we saw a little bit of a dip as well as a flat year-on-year growth, or an expectation of a flat growth. That's because consumers as well started keeping in. All of a sudden, their refresh cycle wasn't too heavy, too fast, and they didn't want to get too heavy into the new releases and the new launches as well. So unfortunately, core ICT took a hit. However, IT services for us was somewhat of a little bit of a golden child of the pandemic, simply because of the managed services or the cloud services that could actually provide as an option, or be provided as an option to organizations to continue their business. So there's a bit of a curve around this, from business continuity all the way to organizations moving towards targeted investments. And we've seen that curve across economically around growth, or the return to growth, where organizations are still looking at now transitioning towards targeted investments. But the point that excites me again, and excites IDC, as you can see here, and this is what I was bringing up just now, third platform sentiment is increasing. Third platform technology. So areas around cloud, areas around AI, security, blockchain, for example. Now, they may not look overly sexy in terms of, you see a couple of negatives there, but you have to understand in terms of the acceleration over the past couple of years, in terms of the intent to spend and the spending trends around it over the past year. Now it's kind of tapered off towards 2020, and we expect a resurgence of this in 2021, especially around targeted investments. So, but cloud, has started to outdo the spending that we thought would occur in 2020. And that's again owing towards accelerated digital transformation. And accelerated digital transformation for us is what's keeping a lot of the economies going round. Simply because with these accelerated platforms that as sectors are starting to use, whether it's manufacturing, whether it's retail, transportation, logistics, ensuring the ecosystem is running, ensuring that banks are being able to support their consumers and offer credit, ensuring that things are going round. We have seen the acceleration around digital transformation practices as helping the economies go around. And this ultimately is going to lead towards the story on the digital economy. So I'll cover that later. So from a global view, now I guess it's around how ASEAN is and Malaysia is performing. I think this is the fun part, where we get more into ASEAN and more into Malaysia. And then we'll get into why this is really important for you to understand. So in May, ASEAN organizations were bracing for impact. If you look at how, again, the impact of the pandemic, again, when we talk about from crisis to recovery, we saw ASEAN organizations really, I don't want to say the word panic, but they started to be concerned. They were bracing for a much larger impact than a lot of them have gone through, fortunately, over this past 6 months. It's not to say that the impact has not been bad, do not get me wrong. However, the good part about us, over-worrying and being over-prepared was the fact that when a lot of businesses took slight stock around things, we have come back with data that's shown that a lot of organizations were able to continue their business a lot quicker than they initially thought they were able to. So at the start of it, they were in crisis mode. A lot of organizations were wondering whether they could meet their bottom lines, whether they can meet their profit targets. Are they going to continue to be in the black? Are they going to hit the red? How many people they have to lay off? Employment obviously was a very big issue. And then as it transitioned across towards the other point of acceleration as well as recovery, that's where the digitalization component and discussion started to occur. So that's where we started hearing poster child technologies, what we call poster child technologies across in ASEAN. AI analytics was a poster child technology, cloud security, IoT, as well as automation, RPA. Those were essentially what we call the poster child technologies of the ASEAN organizations. Now, they were looking towards these new technologies as a manner to continue their business, as a manner to continue supporting their customers as well. On the flip side, internally, a lot of organizations were looking on how to deploy their employees in a, number one, if it's a factory or a shop floor, how do you deploy them in a very safe environment so that they are able to continue to function and increase production levels back to whatever the norm is. Unfortunately, you've seen in the news recently with the factories closing, whether in Penang or wherever, you have seen production levels actually go down. However, this is where the embracing of technology is going to be very critical. And we are very certain that once this goes into their supply chain, once this enters into their ecosystem, the automation process around the production line, the deployment of robotics or cobots within the shop floor, that is going to help enable them to hit into a back to 100% capacity. And we are confident because we are seeing this on the floor right now. We're seeing this on the ground. We are talking to these organizations who are saying that this is the direction that we're going to have to take through into 2021. So when you talk about overall ICT spending in ASEAN, it's going to take a hit, is taken a hit and it's going to take a hit. We are talking about a contraction of close to 5% year on year for spending. It's still going to end at 105 billion US dollars overall in ICT spending. Enterprise ICT at this point in time, if you take out the consumers, is about 41 billion. So circa 45-50% of 45% of total ICT spending. However, again, the encouraging point to note over there is the increase around what we call business and IT services, which are essentially cloud and managed services, solutions, applications that are being consumed by organizations. Why is that important to you as an investor if you're sitting out there and considering Malaysia as a location for you to come in? This is because when you talk about ASEAN organizations, and for Malaysia specifically, when we talk about the move of these organizations to digital, this shows that continuity is going to be there in spite of whatever condition of the external environment is going to be. I think that's a very important point to note. I have a Malaysia specific slide shortly. However, in ASEAN, we have seen organizations actually take that ahead and started to accelerate their digital transformation. So don't read too much into this because once again, we're expecting this to grow. We're expecting this to return to normalcy around 2021. But this year, there's a bit of a hit. Majority of it is hardware. I think hardware is about a contraction of 10%. However, majority of the shift in budgets have been towards services and much lower capex, again, to enable business continuity and what we call a return to growth. So if you look at this chart, and this was what I was alluding to at the start of my presentation, going across to the need to push towards targeted investments, we are seeing this shift very quickly and very dramatically over the past couple of months. If you take this curve and you stare at it from the COVID crisis in terms of an economic situation and business continuity, moving across into developing themselves into targeted investments as well as a future enterprise for the return to growth and the next normal, you can see the stats just a couple of months ago. You can see that cost optimization as well as business resiliency represented the bulk of the area of ASEAN organizations' focus, where there was a little bit of a move towards targeted investments. Actually, in this statistic in March as well as April, was a little bit more negative, where we had more organizations sitting out in business continuity as well as cost optimization. But I do believe this is a July stat. So in July, when we look at it, a lot of them have started to move up the curve a little bit more towards cost optimization as well as business resiliency, and then now towards targeted investments. And the newest stat that we have, you can see the bulk of organizations in Southeast Asia at this point in time sitting out towards targeted investments. And once again, return to growth is the focal point of a lot of organizations, and that's driving the economies. That's what's going to help these organizations to continue to contribute towards the GDP. Governments in ASEAN have taken a very active role, and governments in ASEAN have started to ensure that organizations can continue. Obviously, there are various stimulus packages or various aid packages that have come out to support these organizations, and Malaysia is definitely no exception to that. And we do feel that with all this, with all these programs cobbled together, this is what's going to make ASEAN overall as a very compelling area of investment over 2021. The essence of that is to say this: investors need to park their money somewhere, and when investors need to park their money somewhere, I reckon when you look at the regions and the confidence around the other regions in the world, we are looking at Asia Pacific as well as Southeast Asia to be one of the more optimistic regions or sub-regions in the world today. to accept investments and to be able to move a lot quicker, simply because the fiber of it, if you go back to the first comment I made at the start of the presentation, was the fact that we leapfrogged a lot. We started to create platforms and create infrastructure that was very critical and very important for business continuity, and we expect that to continue towards 2021 and beyond. So ASEAN organizations are now starting to have a vision of the future enterprise. This is my personal discussions with a lot of CIOs out there who I've met across Indonesia, Philippines, as well as Malaysia. I was fortunate enough to manage to speak to them over a period of the past couple of months to understand where they stand and why they're investing in digital, or are they investing in digital to begin with. And they were very pragmatic. They were very practical in terms of what they were looking for. They were very practical in terms of why they needed to move into digital. The simple fact was that if you think about a private university, you think about them just having to just continue what they're doing. They need to educate. They need to be able to train. They need to be able to have their students, go through their courses and ultimately graduate. That is the essence. That's the business objective. What better business objective than that? So when we started talking to these organizations, we realized that a lot of them started having a vision of what they wanted to be, and this vision tied in a lot to their business objective that allowed them to accelerate that a lot quicker. So the Malaysian private university, which I spoke to, for example, they just really needed to engage their students. They just really needed to make sure that their students are learning. And what they did was that they took all their lecturers and pulled them in, ran online courses to help them go digital. And to help them go digital is the key part, because the lecturers right now, they were not ready to embrace a 100% full online manner of teaching, because the engagement all of a sudden is very different. They like exactly what we're doing right now, exactly what Darshini and I are doing right now with you. There was a brand new norm for a lot of us to get used to be able to sit there. Some of you might still be in your pajamas. Some of you might actually be in the office in your business suit. It could be in whatever environment. However, that form of engagement is slightly different. So that business goal and business objective was very critical. You talk about the Indonesian conglomerate that I spoke to, and this was a Indonesian conglomerate that just had 400 odd subsidiaries sitting under them, and all sorts of businesses from property to manufacturing, construction, just across the board. They even had F&B. And initially, when they were hit by the pandemic, and of course, when Indonesia started to talk about their respective lockdowns across Jakarta and even greater Jakarta, because the infection rates were going up, this Indonesian conglomerate I spoke to was one of the first to put up his hands and say, we're not going to stop investing in digital. Digital is what we need to continue to do. It's the only way for us to move into the new economy and to drive towards the new digital economy. This is how we're going to stay relevant, because this Indonesian conglomerate is extremely, well, it's one of those really old conglomerates. They do not want to be left behind. They understand that there are much newer organizations out there who are utilizing different platforms to engage with their audience. And therefore, for them, it was very important to stay relevant at this point in time. But they also had a huge supply chain working out across to China, and they had to make sure that was ongoing. They still had an agriculture business that they needed to make sure that the supply of food was still occurring. So digital was the extreme means for them to do that. And a lot of it was driven by the fact in their heads that they were saying that it's important for us because of the contribution towards the digital economy and our drive towards the digital economy. And the final one, it was a Philippines manufacturer. A Philippine manufacturer. And again, they were very much driven by the need to ensure that their shop floor, their distribution line, their ecosystem, their supply, their logistics, their transportation was all linked and able to run, because they could not take the start-stop lockdowns that were occurring in the Philippines. Unfortunately, in the Philippines, there were a lot of start-stop lockdowns. They were one of the earliest to lock down. They loosened it, they tightened it, they released it, they restarted it again. So unfortunately, there was a lot of confusion. Well, I wouldn't say confusion, but tentativeness around organizations and operating. And the ones that I've spoken to have decided to put a stick in the ground and say that, you know what, this is it. This is what we're going to do in order for us to return to normalcy and to make sure that our output is going to continue. I'll stop here for a minute. Darshini, maybe you have something to add around banks in ASEAN and how they reacted?
I think a lot of the priorities coming into the early stages of the pandemic was in terms of credit risk and assessing the appropriate ways of assessing credit risk in the events that multiple moratoriums were implemented across ASEAN, and how to deal with changing these risk models and adapting to consumer repayment abilities. Yeah.
Yep. So we've also seen in the banking sector for a lot of in terms of how they wanted to continue to operate. The couple of banks that I spoke to were saying they immediately had to move into RPA and automation simply because that consumers were also consuming banking services in a whole different way they never used to. Everyone was trying to avoid a branch at that point. They couldn't go to a branch, and therefore everything went online, and the move to RPA was very prevalent.
Yeah, and I think that was particularly necessary because their contact centers just simply couldn't cope with the way that consumers were used to reaching out, for example, via phone, and they just couldn't handle that capacity. So naturally, the shift, what could have been done like in maybe a year or two in terms of transforming that whole process has happened within the span of 6 months.
Yep, fantastic. That's the acceleration we're talking about. And now we go into Malaysia and how that's impacted Malaysia. And I think this is where we will draw the story out into why all of this is compelling and good for you to know. And again, I'm going to say that if you do have questions, if you do have comments, if you do want to engage in anything, feel free to put your questions on the chat box. We have somebody collecting the questions, and we're going to hear it at the end, and we will try to address it as much as we can. But here we are around Malaysia in terms of the IT spending adjustments that we've seen. The good news here is that when we talk about Malaysia and we talk about the optimism, as I mentioned to you just now, 78% of organizations are optimistic about the return to growth and for 2021. This is where technology adoption for them at this juncture is becoming hypercritical in order to survive into 2021, in order to achieve their business goals, in order to then ensure that their employees are not just engaged, but also productive across such a physical virtual environment. So when you talk about forecasted 2020 ICT spending, you can see that from the chart. Malaysia ICT spending sits close to about 20 billion US dollars, about 18.8, I believe, over there, but about 20 billion US dollars inclusive of consumers. Then IT spending alone, when you take out the C, which is telecommunications, it's about between 10 to 12 billion US dollars as well. We do expect this to contract once again. Unfortunately, in Malaysia, we are expecting a contract very synonymous with the GDP contraction of, I think Fitch has it at about -5%. IT services is anticipated to grow though. And when we talk about IT services, again, it comes into the idea of cloud. It comes into the idea of platforms. It comes into the idea of syncing up virtual and physical environments. Why this is encouraging as an investor, if you're sitting out there, again, considering Malaysia, this is extremely good news because, again, organizations are thinking in the long run. How am I able to then function in a global ecosystem or a global supply chain if this continues? How am I able to then function? I believe Hugh from MDEC had when in one of his openings yesterday, he was talking about the need to function in an environment which is more global, right? And with the idea of having investments across, however, functioning on a very local to global level as well. And I think this is very synonymous with technology adoption in Malaysia and the move towards the digital economy, which is encouraging this. Again, Industry 4.0 a lot of things run on the ideals of data analytics as well as AI. And I believe that the terminology used by Hugh was Malaysia 5.0, which is a very interesting, I guess, proposition for a lot of you who are considering Malaysia. So while technology spending is occurring over here, you can see that this is the map out into the return to growth. Again, you can see that shift towards targeted investments. You can see Malaysian organizations, they are battling resiliency and cost challenges at this point. However, they have started to transition themselves into targeted investments. Again, aspects of AI, aspects of robotics, aspects of automation, those are earmarked poster child technologies of these organizations to actually move forward into 21. Now, if you're sitting there and saying that, Sudev, how is this very different from the ASEAN, Asia Pacific, as well as the global view? Now, here's the part I always like to share with everyone and say that everyone is going through the same curve. That is a very critical point to note. Everyone is moving through the same curve. No one organization's challenge is vastly different from the other organization. Obviously, there's slight nuances. However, majority of the, I guess, the umbrella challenges, whether it's on cost optimization, whether it's keeping business resilient, whether it's continuing business, keeping people employed, ensuring production is up, ensuring employees are productive. These are umbrella issues which majority of organizations are facing at this point in time. And those are the typical ones which a lot of organizations we see in Malaysia are utilizing technology to try to address at this point in time. Our favorite ones are the ones which are using it for a more moonshot style idea. Now, they are the ones building their horizons into the future. What do I have to address between now to 2021? And what do I have to address between 2021 to 2023? And then what do I address from 2023 and beyond? Those are our favorite organizations we've met because they've started to chart their plan very nicely to say, these are the horizons that we're going to move through. And that's what we recommend as well for a lot of organizations across the world, as well as in Malaysia. So we are excited because we see Malaysian organizations starting to think that way. And as soon as they start thinking that way, again, from our point of view, our vantage point is that this is where it makes the ecosystem a lot easier to manage and the ecosystem a lot easier to integrate. So Malaysian organizations are trying to return to growth, and a lot of it is around the span of targeted investments into specific technology to address specific business issues or challenges or business cases that they require to move forward. So after all of that, around the global view as well as down to ASEAN as well as Malaysia, I guess this is the compelling point. Why is all of this important for you? I'll hand over to Darshini in a second. However, I think why all of this is important for you to take note of, especially if you're an investor, is because if you look at on the left-hand side, you can see the chart around ASEAN GDP as well as FDI inflow. And then you can look at the bottom and say top reasons to invest in ASEAN. When you look at the top reasons to invest in ASEAN, you can see the very typical things. And this is still listed on ASEAN's website, by the way. Active consumers, growing middle class, very, very typical, sustained economic growth. Obviously, we're expecting a recovery back next year. Preferred workforce or talented workforce. I think Serena alluded to the fact that Malaysia does have a very talented workforce. If you look at a lot of the startups who have gone regional and global, a lot of Malaysian talent are actually sitting out there as well. Excellent investment climate, high return of investments, infrastructure support. A lot of governments have been plowing a lot of money into investments. In fact, if you cut across Southeast Asia, there's been a lot of investment into hard infrastructure as well as broadband connectivity, fiber. That's been the hallmark of a lot of governments over the past 3-4 years. Integrated supply chain, again, and the digitalization of the supply chain, I think that's going to be very important as Southeast Asia continues to be as a manufacturing hub. And ultimately, I think the bottom one, and this is just my humble opinion, but if there's somebody here from ASEAN sitting in this presentation, my humble opinion is to maybe relabel or rename the idea of the good life in ASEAN, because I find that strange to be a compelling factor to want to invest into ASEAN. However, one of the factors listed out by ASEAN is good life in ASEAN. Now, for us, when we stare at this and we put all the indicators together, we have also added, and from our vantage point of interviewing investors who want to move into Southeast Asia, Asia Pacific, Southeast Asia, even Malaysia specifically, the setup of a digital ecosystem and a digital economy is really the top criteria right now and critical factor for a choice location. When they think of a country they want to invest in, when they think of an area where they want to put their entity or to bring their money in, very quickly, the two criteria that comes into their minds at this point in time is number one, is there a digital ecosystem to support my business? How much presence am I required to have there versus can I have lesser? Can I accelerate or decelerate my presence, but still continue business? A digital ecosystem of support is also important. So if you can look at um at the chart on the right, you can see that future industry ecosystem as well, building of digital trust partnership ecosystems, digital innovation. How does the ecosystem fit into this investment coming into the country? That is very important, a digital form of an ecosystem. And of course, the drive towards a digital economy. Now, if you flip this script just 10 years ago, it's it's oddly different when you view as to investments coming into the country. A lot of the drive for investments coming into the country about 10 years ago, even Malaysia, has been the fact that we can port expertise from overseas into the country. The idea of digitalization or digitization was driven very much by organizations who invested or had FDI into the country. So whether it's a major organization or major global manufacturer moving to Malaysia, it is usually that form of technology which is brought out to help the ecosystem go around. Now, not to say that that is not so much the case right now, but a lot of global investors are now saying that we want it pretty much set up as well so that we can come in and integrate with it very strongly and very closely, very quickly, so that we can go to market. So now is both sides having to integrate with each other. And I guess to move on with the more compelling factors as to why Malaysia is quite a bit of a choice location when it comes to all of this. So Darshini, I'll hand it over to you.
All right, thanks, Sudhir. Very interesting. So in the next section, we'll perhaps move into the drivers of consumer demands within digital services. So if you look at the slide now, you see the top reasons to invest in ASEAN. I'll pick a couple of points to draw out some statistics and some key trends within the ASEAN region. All right, so ASEAN as a focal point for digital services. While many tech developments in Asia Pacific has been led by China and India at the forefront of that digital innovation curve, it's also important to look at the ASEAN region, which holds significant demand from digitally active consumers, and that is growing exponentially. So we see a strong transfer of technology use cases or technology innovation from these leading markets to the ASEAN region. So we'll start off by painting a picture of these digital services that we talk about and some notable statistics here, as well as its components that span across online media consumption as well as ride-hailing services. So we see about 62.8 billion US dollars in e-commerce transactions in 2020, about 3% growth in food delivery services from 2019, about 14 billion USD for online media consumption, and about 5 times growth in terms of the number of users actively using ride-hailing services. And Malaysia's digital economy contributes about 19.1% of the country's total GDP. And comparatively to regions with higher GDP per capita, for example, like Indonesia, our levels are pretty much comparable. And so that holds like significant testament to the strength of our digital economy. And so we go into, the internet penetration across ASEAN. As we look at trends in consumer digital behaviors, we see that ASEAN region, although slightly behind US, has already trumped bigger markets like China and India. And Malaysia has about 81.4% of internet penetration, which is a significant number. And where markets, have medium to low internet penetration, the online population is generally consists of internet users who are young, urban, affluent, and educated. And this is the case throughout Asia Pacific. And similarly, consumers in the ASEAN region on average spend a longer amount of time on the internet compared to the US, China, and India. Now, of course, this doesn't factor in, recent work from home conditions that most of the region is subject to now, but this is the base assumption that levels will go back to when normal conditions assume. is expected to grow at a CAGR of about 5.4% up until 2023. And in Malaysia, this forms about 40% of the population, termed as the M40 group. Now, Malaysia's median household
Whoops. Yes, I think unfortunately Darshini she will come back to this shortly, I believe, and she's logged out. But I think the stats that she was planning to go through, we will get back to this so that she can actually go through, was all around the areas which you saw that was growing, compelling for ASEAN investors to actually want to invest. Darshini, are you back?
Yeah, I'm back. I'm sorry, I had a weak internet.
Sure. Okay, I'll go back to your slide and you can take over. Oops. Okay, unfortunately, I think Darshini is still having internet. Well, these are the perils of working at home. That's all I'm going to have to say. The unfortunate scenario that a lot of organizations have had to go through and endure was around internet connectivity. And if you look at a lot of especially emerging countries across Southeast Asia, connectivity has been a very huge stumbling block for a lot of organizations to create a physical as well as virtual environment. So in taking that, in fact, if you see over the past 6 months, majority of governments have been looking towards the creation of hyperspeed internet or fiberization across the country in order to help with that aspect. And I see Darshini is back live. So
yeah, how ironic is it that we're talking about internet penetration and then my connection just goes bad? Maybe
you can rewind your slides a little bit.
All right. Okay, so I was talking about the access to finance that drives consumption within the digital economy. So what you see on this graph here is that smartphone penetration is consistently higher than the bank population. And banked here means access to both debit and credit accounts. Now, access to financial services is of course highly tied to consumption. So as consumers have access to, for example, mobile wallets, web or mobile banking, for example, there will be an increased spending through these platforms, these sharing economy platforms. Now, what this gap or these little red arrows represent is the credit gap of smartphone users, meaning this percent of the population have smartphones and are underserved, having no regulated credit accounts. So access to credit is another key consumer indicator that we track. And for highly banked regions, the recent trends in the credit landscape are now buy now, pay later schemes, which are increasingly being promoted for better cash flow management or affordability on higher ticket purchases. Meanwhile, for lower banked regions in ASEAN, there are significant opportunities to tap into new to market segments given the higher smartphone penetration. And what this diagram seeks to show is that there are opportunities within these various regions for digital financial services to bring more users into the digital economy. Okay, here we have IDC forecast on the various components of what we consider as the internet economy from 2019 to projected growth in 2020. Now, across the board, most grow by about 20 to 40% CAGR, with the exception, of course, on online travel platforms that might take a little bit more time to recover. So ride-hailing, we see growth of about 23.4%, sharing economy services, which is essentially services using shared internet platforms to match services between providers and consumers. For example, the lifestyle apps that are quite prevalent in this part of the region. And then we have about 65.2% in alternative financial services that includes platforms like P2P lending, crowdfunding and such. And then we also have about 41.1% growth in mobile wallet transactions. Now, e-commerce is about to grow by 24.4%, online and gaming within the 20 range. All right, next, I'll just touch a little bit on the vibrancy of the fintech and the startup community in Malaysia. And this is a snapshot of all the agencies and different funding providers in Malaysia. These agencies essentially serve as a point of interaction with regulators or accelerators to not only test the proof of concept, but to increase exposure and bolster a more supportive and collaborative environment for those organizations who are looking to kickstart their business in Malaysia. So for BNM's FinTech regulatory sandbox, organizations can essentially test their solutions in a live environment and basically go through the whole process with the regulator to ensure compliance. For the FinTech Booster, it's a collaboration between BNM and MDEC, and this essentially supports the growth and development of FinTech companies in Malaysia. And one thing to note is that it's also open to foreign companies who don't have presence in Malaysia yet. And then we have Magic, and under the Ministry of Science, Technology and Innovation, notably aiding about 2,000 startups so far and offering programs, but a special mention here to the My Startup Hub that targets global startups who want to establish a business hub in Malaysia. And more importantly, it takes them through the whole process of business incorporation, talent acquisition, as well as collaborations with various Malaysian agencies. Along with that, we also have a couple of notable names of venture capitalists who specifically target the startup community and constantly look out towards compelling solutions that not only meet the needs of the Malaysian market, but those with the opportunity to grow into a more pan-regional organization. All right, I believe you were talking about the ease of doing business, right, Sudhir? Did you want to continue first?
Well, actually, I had just flipped to it while waiting for you to come back. Then you came back, so you can go ahead, and then I'll take over from there, or how you want to?
Okay.
Okay.
No, I mean, it goes without saying that Malaysia is ranked pretty high up globally in terms of the ease of doing business. But we've also pulled out some other key indicators that are more important for those looking to invest in Malaysia. And where Malaysia has been ranked pretty high up for the ease of getting credit, protecting minority investors as well as cross-border trades. Where the country now seems like it falls behind is in terms of the ease of starting business. But like I mentioned previously, for the fintech and startup communities, there are active agencies whose main function is to make this process a lot more easier and to support these organizations to kick off in Malaysia. Yeah.
Okay, so that's my cue. I just get back. Okay, so with that said, and what Darshini has presented around the stats that you've seen in ASEAN as well to Malaysia, I think, again, pulling all of this back around digitalization of economies and digitalization across countries and governments is the fact for investors, once again, for them to want to come in, we're seeing the new areas which are highlighted in green in this chart, the new areas which are going to be very compelling for them to want to come in. Digital transportation, logistics, supply chain ecosystems, that's extremely important, again, because ASEAN as well as Malaysia, we are very much a manufacturing hub, and that's going to continue, obviously, for the foreseeable future. And in that essence, then when you pull that back, the need to integrate into digital ecosystems continue. A vibrant startup community. Now, this is talking about the ecosystem play again. Am I able to feed into very vertical solutions or vertical specific applications to help my organization within this digital ecosystem? That has become a very compelling factor for investors as well. Industry 4.0, the acceleration around Industry 4.0, of course, the digitalization of manufacturers and moving into new technologies, transformation initiatives of transformative initiatives. So the application of, again, AI, analytics, robotics, cobots, digital supply chains, IoT within logistics and transportation, is that accelerating? Is that happening at this point in time? And of course, then the government's focus into a digital economy. Ultimately, I guess one thing to suggest here, and I think is very important, is that over worrying about the percentage of digital towards GDP is, I think, occasionally the wrong indicator to think about when it comes to digitalization of the economy. Now, it's nice to be there. It's nice to have 30% of the economy digitalized. Believe me, IDC, we track that as well. However, the use cases across the industries and the sectors is more important. The interlink between the sectors is going to be hypercritical in order for the success of the digital economy. Hypothetically, if you have a very accelerated or digitalized ecosystem within sectors, however, and government is not keeping up with that, that interlink between sectors towards government is going to be broken. And if that interlink is broken, then all of a sudden, however that percentage is, it doesn't matter, because ultimately, when interest comes into any given country, that link has to occur. And we are excited, obviously, as we go ahead, because looking at the multitude of programs we have in Malaysia, we think that that has been recognized. So the criticality of digital ecosystems for industry development is hyper important. I don't know how else to put it to you. I don't know how else to increase the importance of saying this around digitalization. New industry ecosystems are now blurred. You know, as Darshini talked about just now, you talk about payments, you talk about banks, if you talk about telcos, all of them have now started to space themselves into different sectors and different verticals they never once used to play into. Telcos have moved into payments, banks obviously have gone more into insurance play, and you know, we've even seen retail start to move into payments or different sort of platforms. Sorry, Darshini, you want to add something? I saw you go unmute, so.
Yeah, okay. Yeah, no, I was just about to elaborate on your point on telcos, right? We're increasingly seeing telcos build more into the SME segment in terms of offering not only packages, but other payment options like POS devices, and closely integrated into the solution, into getting better internet connectivity as well for these segments. Yeah, which is something that we've never seen, before in the last probably 3 years.
Yeah. So the blurring of industry lines are continuing to occur, and as potential investment comes into a country, as potential organizations who are investing into a given nation, that blurring of their industry line has occurred, and therefore the need for that support ecosystem, whether inter or intra in industry, is going to be extremely important. That support structure around innovation, that support structure around IP protection, that support structure around digital innovation, for example, productization, R&D, those are elements which we think are going to be hypercritical for investors moving in. And again, we are very happy to see the type of programs that Malaysia has right now to encourage a lot of this. And if you want a little bit of a comparison, and although this may not be, I hope you can read it. There you go. It's been made a little bit larger for all of you to read, I think. But what we what we have done, and do not take this overly at face value, it's just that we've taken some of the rising stars in Southeast Asia, as we put it. Obviously, Indonesia being one of them, Philippines also being one of them over the past couple of years. Again, barring a lot of the issues around the pandemic occurring, or hard infrastructure issues. But when you talk about a digital economy, you look at Malaysia, you compare that out, 20%, circa 20% of GDP. But what we're excited about Malaysia are the large scale initiatives focus on digitalization, which to us, we see more support and more government involvement and more government, structure built into place to help move the industry along. And Southeast Asia continues to be very unique in that regard. It's very unique in the regard where government plays a very active role in the digitalization of the economy. Now, you do get that across in different, when you think about AI, for example, and the investments in AIs across countries, US, China, there are very huge amounts of investments there. I think China's circa, 150 billion. You got US coming in, topping up at, 2 to 5 billion US dollars. Korea, Japan, very similar. France has that, Germany has that as well. But they have put money into that, very much into the government development and integration into AI as well, when it comes to their services or platforms, and then support out the sectors. Malaysia, in certain regard, across Southeast Asia, and if you caught my panel discussion earlier on. I think that was earlier on in this month for MTM as well. One of the areas I was talking about is to be proud about is that Malaysia does have some of the better programs compared to its Southeast Asian counterparts to develop the talent, to develop the ecosystem, to develop the tech vendors and the supply as well. The only occasion that we get a little bit nervous is that how much of a crutch that becomes when it goes to innovation and R&D. How much dependency is there on the government of Malaysia to help them along on that regard. But in recent time, we've been seeing more industry ecosystems take up that challenge, more industry ecosystems privately driven to want to achieve this. And that's an extremely encouraging point of view. You look at Industry 4.0 indicators across Malaysia, Indonesia, and Philippines. Malaysia, we've had Industry Forward initiative. We had a policy release, excuse me, is a mix of development across enhancement of existing manufacturers, but of course, moving into new industry development as well. It's a little bit holistic in terms of how he wants to integrate both ecosystems, and obviously then tied into MIDA on the type of investments that come into the country. So we see this as a very compelling factor for Malaysia as well on some of the initiatives and policies set up. Indonesia, by virtue of being Indonesia, attracts an audience. Right. So by virtue of being who they are, however, they're still very capped. They're still very captive in that sense. And their manufacturing industry remains very cost focused. And it remains very low, and simply because it's almost deliberate to a certain point, because they need to put individuals to work. They need to continue to stack up the factories with 3,000, 4,000 people and give individuals their employment. So Indonesia's manufacturing, I mean, it attracts investment by virtue of who they are, but that's why, we've seen a lot of manufacturing base move there. But they are focusing on new subsectors within manufacturing, as well as new technology areas that they want to spend on. Again, AI, blockchain, robotics coming into play. Again, the poster child of Industry 4.0 coming into play. But whether we've seen the actual implementation, that's probably going to take a bit of time. We move to digital supply chain. This is just a ranking across the Logistics Performance Index by World Bank. But the good news around all of that we've seen, and funnily enough, you see Malaysia 4, Indonesia 5, and Philippines 6. The upper countries, you're going to see Vietnam, Thailand, as well as Singapore ranking much higher on this Logistics Performance Index by World Bank. However, the digitalization of the supply chain, we think, is very critical. And we've seen more activity of that in Malaysia compared to the other two countries, as we have benchmarked over here. And of course, the vibrant startup community, right? We also feel that Malaysia has done a very good, active job in how small the market is to push up the vibrancy of this community, and to push up the vibrancy of this, and I guess the environment and ecosystem of startups. Obviously, Indonesia has plowed a lot of attention into this, and the government has put a lot of focus into this over the past 5 years and accelerated this very strongly. There's been a lot of involvement from governments, the government in Indonesia, into startups, or the relocating startups, or helping startups grow in the country. And we think a lot of the initiatives that they have over there are something which I would say the envy of a lot of Southeast Asian countries at this point in time. It's very privately driven, though. There are a lot of investors out there, and a lot of Malaysian investors also going to Indonesia, obviously. But there are it's very privately driven in that sense. And the vibrancy of the ecosystem, owing to the consumers as well as the talent, that's obviously what's helped them to stand out very strongly in Southeast Asia. Philippines for us is the new boy on the block. Philippines, in terms of building its ecosystem and building its startup community, is the new boy on the block, and something to actually pay attention to over the next couple of years. How Philippines is doing it, they're very targeted towards the type of industry and the setting up of startups to support these industries. And I think the government has been very proactive in terms of helping to pass laws or regulations to support the startup community in the Philippines. Now, if some of you might have a point around the total number of startups, I think that's extremely debatable in terms of 3,000, 2,000 plus or 300 across each country. That's a very debatable stat. It is based on the information we were able to receive. However, it could be slightly different. So again, please don't take that at face value. However, based on the estimations we're looking at, it is around circa this amount. So when we compare this out and just on a very, I guess, on a very serial basis across into Indonesia and Philippines, you can see that Malaysia has had the fundamentals in place a little bit longer than these two countries. And I guess because of the fundamentals built, starting off with the MSC initiative, 96, period to early 2000s, a lot of the foundation was built. I think that puts Malaysia a little bit in a prime spot. Now, the deceleration is what or I guess the deceleration around driving the vibrancy of Malaysia is where our concern is. And this is where we think that with the new so-called competitive countries out there, that's what's going to be very important for Malaysia to continue to stand out and I guess stick out its chest on where we do well, not be overly humble in that sense, but also to say that we do have the talent, we do have the infrastructure, we have the right innovations, we have the right companies, and therefore we've been doing this a little bit longer and we are the right choice for you. So in that sense, I guess I'll wrap up with the next 3 slides. I saw a couple of questions come in. That's why I was looking at my phone. And we'll address a couple of questions before we end. But can Malaysia be the heart of digital ASEAN? Yes, it's come down to this. Are we going to say yes or no? No, we're not going to say yes or no. We're not going to we're not going to make up your mind for you. That's really going to be up to you to actually do it. But can Malaysia be the heart of digital ASEAN? Let us build a case for you. Number one, a digital ecosystem is a prelude to a digital economy. Ultimately, if you look at the drive towards the digital economy in Malaysia, the seriousness of the government and the agencies driving towards a digital economy, we feel, again, very excited about this prospect on building towards it. Now, digital ecosystems are occurring across different industries. And when you think about the different industries and the digital ecosystem and the partner ecosystem which is being built up, we take a little bit of comfort in that for organizations wanting to move into Malaysia, they can fit into platforms. They can fit into ecosystems that are going to help to drive their industry. And ultimately, the goal of being part of that digital ecosystem, obviously, total FDI doesn't play into the total GDP number, but the offshoot of that or the byproduct of that does lead towards higher GDP yield. So when you look at that and how you can fit within an industry ecosystem, the drive towards digitalization and the digital economy, we feel Malaysia is very well suited to actually help investors or organizations that move across into Malaysia to build upon that. IT spending, as I alluded to at the start, it is expected to return. We're looking at about a 3% growth on ICT across in Malaysia in 2021, again owing towards more transformative or digitally transformed type initiatives, third platform initiatives to drive verticals. So that is the first factor that we put up. Second of all, digital is a firm agenda for Malaysian organizations at this point in time. If you're sitting there and looking at the screen and having wondered, are Malaysian organizations truly serious about a firm agenda? We have seen through our surveys on the resiliency of Malaysian organizations over the past 9 months to want to move and the intent to move towards new technologies. So down there we've listed, and those are actual stats we have from Malaysian organizations here, which are helping again the economy go around. So your uptick of close to 10% of spending around cloud services as well as analytics, and then you have up to about 20% spending in cybersecurity and IoT, and of course manufacturing and finance plowing very strongly into robotics and automation. The good news around this area, and I guess it's really hard to find good news out of a pandemic such as this, is the fact that organizations recognize the need to spend. And we feel their digital agenda is getting stronger day by day. Based on the statistics that we get, the interviews that we have, the interactions we've been able to organize with a lot of the CIOs as well as businesses out there, they know this is a very important agenda. So it is a firm agenda for Malaysian organizations moving into the future. And finally, and if some of you are sitting there and looking at the pictures on the left, that's my favorite. You don't have to read that though, but I think you would recognize it at least. Malaysia has a history of attracting foreign investment and continues to evolve to do so. We've seen this very much from the early days of MSC Malaysia, when MDC was around, the SSO division was around in attracting a lot of investments into the country. I think they've sat there and talked a lot about the corridor over. I love that slide. I'm sorry. The reason why I put it is because it's something that I've seen, from the earliest days of ICT, and looking at that slide, it reminds me of a time when Malaysia was truly ahead of a lot of Southeast Asian countries when it came to the conceptualization of a corridor or a technology hub or a digital hub. So Malaysia has that history. Malaysia has that a history of setting up a hub, setting up smart cities, and try to integrate these smart cities. Obviously, there was a lot of bumps along the road. And if you look back and you look across different countries in Asia Pacific, and you look at how either smart cities or tech hubs started off, a lot of them were born out of universities and government involvement. You look out in Korea, and Datapinopolis was very much an R&D hub, more so before it became a technology hub. You look across to the UK and you think about some of the technology hubs over there. They were born out of just tech buildings, in fact. R&D buildings that then sprouted into ecosystems. So when Malaysia put this forward, Malaysia was thinking about a much wider corridor, and the conceptualization was there. Obviously bumps in the road, but we're happy to say that a lot of this is something to be overcome and updated and evolve over time. And as that evolves, when incentives evolve, when a lot of discussions around technology adoption and ensuring talent is available, those discussions are happening already in Malaysia. There are programs which have been introduced. There are, again, a lot of talent which is available within Malaysia that can be used. And therefore, with us here sitting here talking about, can Malaysia be the digital hub ASEAN? Again, it's up to you to decide on that. But we think that they have some very compelling factors to add value towards your organization coming and investing into whether Southeast Asia or Malaysia. They are compelling factors for you to consider. Darshini, anything to add?
Yeah, I second your opinion, Sudhir. There really isn't, a definitive answer on whether Malaysia is the right investment hub for you, but rather organizations will have to look at, other factors, like in terms of what is the best fit in terms of ease of doing business, the regulatory environment around that organization and that industry that you look to serve, as well as the digital infrastructure that is readily available. And then you also need to think about, is the solution or, the business case that you're bringing to Malaysia, does it address the needs of the market if you want to appeal to a wider Malaysian audience, and really create a compelling enough proposition, for this market? And the last one would be, something you mentioned about being able to plug and integrate into the digital supply chain, right? And yeah, I agree. Malaysia has some, interesting propositions and stands really well against the other key markets in ASEAN.
Yep. So with that, ladies and gentlemen, we thank you for your time. Again, comments, feedback, criticism, our emails are there. Please drop us a note. We'll be very happy to interact. There are a couple of questions. I guess we have a few minutes to take on a couple of questions. And Darshini, feel free to chime in on some of these as well. I was just looking at this around digital blueprints and how other countries, they're going through the same process. Where are they now as compared to Malaysia? I'll just take that, and then Darshini, if you have anything to add, please feel free to do so. I think when it comes to digital blueprints, the largest, or I guess the most important part that we've seen, the differentiator on how one country does from another, is also in terms of the involvement of, whether you call it industry associations, towards industry-specific digitalization. Let me explain on that. So it is okay to have an overall blueprint, as most countries have across Southeast Asia and Asia Pacific. There are overall blueprints to guide ICT across. However, the strength of the implementation across industry sectors are very reliant onto the industries or the associations or the agencies to drive within that given industry. Now, in Malaysia, the federal level, or the overarching principle blueprints tend to be their driving factor as a policy into whether you want to call it private sector or specific sectors. It tends to be the driving element. The difference we've seen across, for example, in Indonesia or Thailand, or even in the Philippines, is that while the overarching blueprint is there, there are very strong individual sector blueprints also introduced. And in that essence, then that drives certain sectors a lot faster, while Malaysia is a little bit more holistic in terms of its drive uh, in regards to sectorial digital transformation. Obviously, manufacturing was earmarked, Industry 4.0 was earmarked by Malaysia as a very critical point. But aside from that, we see that, and finance, I think Darshini will have some comments around that. Aside from that, we see that more as overarching rather than very industry specific. Darshini?
Yeah, I think in terms of the banking sector, it's been a gradual growth, but digital blueprint or not, but it definitely provides the right infrastructure for these kind of changes to sort of happen within the financial service industry. And, traditional banking has been pretty much manual all this while, but as we see the entrance of new fintech companies, that definitely ramps up the competition. But I think the right infrastructure is in place.
Okay. We have another question here, and maybe Darshini, you want to talk about digitalization of the financial sector across ASEAN, the differences in Malaysia, because I want to lead off that, we're talking about sectorial digital transformation. Maybe you want to talk a little bit specifically around the financial industry.
Okay. Yeah. In terms of the overall ASEAN region, obviously, Singapore hits the curve in terms of the rate at which the technologies they implement new technologies and new use cases into banking. In Malaysia, it's pretty much it depends on the latency of the regulator in accepting these kind of new technologies. For example, using eKYC in onboarding, for example. So Malaysia is I think like right next to Singapore. We have, the regulators are still actively trying to sort of keep up with these new developments. And so we have, two new regulatory frameworks coming out soon that are quite exciting for Malaysia. Specifically, the eKYC that's already out, but we're starting to see more rollouts by the traditional banks. And we're also having, that's the digital banking license that's about to come out soon. And, there's a lot of talk about digital banking within this region. But yeah, it holds, significant growth opportunities, and it's definitely going to change some typical banking behaviors.
Yeah. So we have another question here, and Darshini, if you want, you can take it, or I can chime in as well, around the RCEP and how that's going to help to accelerate digitalization across economies in ASEAN. Maybe you can start your thoughts. I'll wrap up with mine as well.
I think, in terms of the RCEP, the main thing, since we're talking about technology, would be the transfer of technology from other countries, some countries like Singapore or China that, by ways of investing into the Malaysian market also provides, a way to transfer this technology across. Aside from that, I think it's also access to capital for the Malaysian companies as well.
Yeah, I agree, and I was going to talk about that because the transfer of technology again. Now we're picking our spots, isn't it? Going back to the comment I made, once there was investors who brought technology across to countries, it was for us to actually learn on that. The flip side now is the need for ecosystems to be started up. But now with the RCEP, we think is going to accelerate the digitalization across Southeast Asia because there's going to be a need for an equilibrium across all countries when it comes to technology adoption, especially since we are going to be dealing with countries that are going to be more mature from a technology perspective. Therefore, the demands around technology and the need to have those technology ecosystems is going to heighten, is going to increase. So we think we're just excited about our CEP as well. We think that that's just going to help in terms of digitalization and almost, for lack of a better word, force the digitalization to occur whether they want to or not. So last question, maybe Darshini, if you have an opinion around this, how can digital transformation help to integrate ASEAN communities better?
I think this the best way to answer this in terms of integration would be integrating the supply and value chain, like you mentioned. You know, if you're talking about the manufacturing industry, and you're getting your supplies from a different country, and how do you sort of create an ecosystem that is effective enough in terms of reducing, increasing cost optimization, reducing inefficiencies, and sort of to speed up that process as well.
Yep. And we think ultimately, again, this ties up very, very well into our CEP, that acceleration around digital transformation is just going to help in overall business relationships, is going to help in overall, I guess, platforms of exchange of ideas and innovation and R&D. Ultimately, all this digitalization is going to lead to that. We anticipate there's going to be more partnerships. We already see that. I mean, the GAIN program over here, we see a lot of organizations going out across Southeast Asia, forging partnerships and opening new markets and having access to markets. And we think that's going to continue, especially when the digitalization occurs. Again, when the playing field is level in terms of technology adoption, in terms partnerships are going to be a lot easier. And again, that's going to I guess spur a lot of innovation as well as R&D to help the ASEAN region. So with that, I guess we've come to the end of our presentation. Thank you very much for your questions. For those perhaps we didn't get a chance to answer, if you have again any specific questions, our emails were on later on. Feel free to drop us an email. We'll be more than happy to answer them. We appreciate your time. We hope you had a good coffee, good drink, good teh tarik, or a roti canai while watching us. And we'll talk very soon. Thank you very much and good luck to everyone.
Thank you.
Thank you, Mr. Sudev, as well as Miss Darshini, for that very insightful session. And right now, ladies and gentlemen, will be moving on to our next session, and it will begin shortly. Click join session.